gold has been correlating for the last 2 months, but it has to break out eventually. The question is, which way is this likely to go? We're going to talk about that in today's video. I'll also give you guys an update on the DXY because where the US dollar trends from here is going to be critical for gold. All right, so looking at the gold daily time frame, we know that the market has been very sideways up here ever since that all-time high from back here in late November going into December. Okay, so with that in mind, I don't favor trading this market while it's sideways. However, we do have a potential opportunity coming up depending on which way the dollar breaks, which we'll get into in a moment. But here on gold, you can see that we do have a trend line off of this low down here, this swing low. It didn't quite touch this one. However, we have several lows through this area. And in fact, you could even draw this a little bit higher and it would still be just as valid. So really for gold, the area that the market has to get below now is going to be right here around 2020, okay? You could make the case for like 2025 or so, but I like going with something more conservative, like today's low right around 2020. Now, if we get below that, then we're looking at a trend lower down here towards some of these lows right around 2000, potentially 1975. Now, why am I looking for a move lower from gold and not higher? Part of that has to do with my view on the US dollar. However, the other part of that is something that we've discussed now for several weeks, and that is here on the 5-day or weekly chart. It doesn't really matter which one you choose. Either way, you can see that gold has been sideways ever since the price action from back here in 2020. So with this in mind, like I've said over the past few weeks, this up here is not where I want to be a buyer. You know, if you're going to buy gold, you want to buy on pullbacks here and not at macro resistance like this one up here right around 2080. Okay, so with that in mind, I do think we're likely to see a pullback from gold. Of course, it is going to depend on what happens with the US dollar, which we'll get to here in a moment. Okay, so for gold, guys, let me go ahead and get this off here so it's a little bit easier to see. So for gold or XAUUSD, what I'm looking for is a sustained break below this trend line here. So right around 2020, if we get something down here in this area, then I think that would confirm the breakdown. We may get a retest up here as new resistance before some selling pressure comes in. And then from there, like I said, 2K is going to be support, as is 1975, and the low down here around 1930. And alternatively, of course, if we get the market breaking higher, taking out these highs from back here, then that could start to negate the idea, especially if we see a sustained break above this area up here around 2080, that macro resistance that goes back to 2020. All right, now you could draw a trend line off of these upper wicks as well up here. So something like this, however, it's not, nearly as well defined. And you also have this wick back here that makes it a little bit more confusing on where that trend line should be placed. But if you were going to draw something here, I would maybe make it like this off of these two wicks. All right, now let's take a look at the DXY, the US dollar index, which has been in rally mode ever since the start of 2024. And by the way, guys, if you want to join us in VIP and get 70% off lifetime access, see the link at the top of this video. You're going to get daily videos that include 5 to 10 different markets, exclusive charts and setups, real-time discussions, and you'll also be able to see my trades in real time, plus the course that's coming up. So see that link, get your 70% off, and join us in VIP today. All right, so the DXY came into some resistance here at 104.45 recently. So we've talked about this in recent weeks as well, where you can see this pivot right through here, right around 104.45. Notice how the market closed right at that level a few days ago. So it's no surprise that we're seeing a little bit of a pullback here from the dollar. Now, the question is, though, do we see a deeper pullback down here into 103.50 to 103.80, these recent wicks from back here, because we know that this level goes back to 2016. If we go to something like the 12-month chart, all right, I'm going to remove the levels here so it's a little bit easier to see. But you can notice how on the 12-month chart, every candle here is 1 year. And what you'll notice is this area right around 103.50 has been significant going all the way back here toward 2016. So we've got the highs from back here. We've got a closing price here in 2022. So this has been a critical area for the dollar. And this is why the market has stalled out here recently. But the question is, again, are we going to get a deeper retracement or is this it? And I think the answer to that really depends on what happens up here at 104.45. So you can see where, once again, the DXY is retesting that area today. So this wick right here came very close to that area. And once again, we saw some selling pressure come in. So this is verifying for you. This is validating the fact that this area up here is going to be critical for the dollar. If we see a sustained break up here on the higher time frames, then 104.45, 104.50, that general region flips to support. And we're looking at 105, this pivot from right back here. But as long as the DXY is below this, okay, especially if we see the market close back down here today, back down here below these highs right around 104.20, if we see that, then there still is that potential for the pullback down here into support. Okay, now this moves mostly inversely to gold for the most part, at least right now. The two can move together, but right now there is mostly an inverse correlation. So I do think that, a sustained break above this area up here is what it's going to take to push gold lower. If we see the dollar, come up here, retest 105 and continue higher within this uptrend that we've seen so far this year, right? If this continues, then I think that that's going to weigh on gold and give us that breakdown toward 2000 and potentially 1975. All right, but right now, flipping back to gold though, guys, I really think that, as I said, it is going to take a sustained break below this area right around 2020 to give us the confirmed breakdown below the structure here, right? The symmetrical triangle off of these recent lows. And if we get that, then again, a 2K is going to be your target, 1975, and potentially the area around 1930. Alternatively, we could get one more move back here toward resistance. So this area right back here, which comes in at right around 2055, 2060, that general area, that is going to be resistance. What would negate the bearish bias here for gold is if we were to get a move up here toward this area. Okay, so a move back here toward this region, a close above that, and then also a sustained break above 2080. All right, I hope today's video will help you trade gold and also has given you some insights on the DXY. Don't forget to claim your 70% off VIP access for real-time discussions on gold, currency pairs like the euro and the pound and the dollar yen, and also crypto and the stock market. Trade well this week, and I will talk to you again tomorrow.